Hi, I'm Brian Colligan from AlphaGrowth, and today we're going to go over how to short the Trisolaris token. Now, before we get into that, just a little bit of background about AlphaGrowth. We are a strategy consulting and go-to-market marketing firm agency in the crypto space. Effectively, we help different ecosystem funds, we help token projects, we help you with your strategy, your tokenomics, and your marketing and growth, the growth of your community, growth of your token price, and token optionality. So that we have a whole bunch of articles about that. But today, how to short Trisolaris. Now let's get into it. So to start, we're going to look at a couple of the dexes and a couple of the dex category, right? So DefiLlama is a great site and resource for this. Effectively, you can go down and see all of the different data that you need about the dexes. It's not financial advice to short Trisolaris, but look at the history of the token, right? So it had a pretty decent launch, growth spike in terms of like when the individuals were really getting and engaging with the token, and then this slow trajectory down. But this isn't something that's alone to Trisolaris. This is like the governance tokens model, and effectively like every single time you see these DEX launches and that has a governance token, they kind of follow the same trajectory. If you look at the original one, Sushi, you got token, spike, drop. Here it hit its maximum capacity when it was adding crazy amounts of tokens like all the time effectively. And then they don't have, they hit like 2,000, 3,000 different pairs, and they start to slowly decline, slowly decline, slowly decline, slowly decline. So looking at Sushi, let's look at PancakeSwap, very similar. They hit their maximum capacity of different trading pairs, slowly decline, slowly decline, slowly decline, right? Solidly. This was a rapid experiment a couple months ago. Boom, boom, and slow, quick decline, in a matter of like 10 days, dude. Like it was crazy. Trader Joe, this one's a younger exchange on AVAX, but look, same model. So let's go back to the Trisolaris. So if you see this strategy here, that the ability of holding the token price, and you think that the dexes are not going to be capable of it, right now, the total supply that's available is only about 1/3 of the total supply ever going to be there. So already at 1/3 of the total supply that's ever going to come into capacity over the next 5 years, the token price is unable to sustain the token price and it's crawling down to the right. Okay, so let's get into it. Straight up, I like Trisolaris. It's one of the best dexes on Aurora, and the Aurora is an EVM on top of Near. It's super fast, super cheap. I don't have to pay like $40 a transaction. They have like some really cool farms. Early on, I was making a lot of yield and then lost a lot of yield because of token price couldn't maintain and sustain the stability. I was super hyped about it. I thought it would, really be an amazing token and an amazing exchange and to get. And they have some crazy APYs, right? So if you look at this, the Tri Aurora token pool, you're looking at like 84% APY. If you look at, Bastion, Near, you're near 200% APYs. So there's a lot of different options. The swapping fees are next to nothing. They're just easy to pull, easy to farm, easy to bridge. They have a staking. And I think this is super important, right? So if you look at yesterday's APY, APR, I think you're going to look at that and figuring out what the beta is. Now, 46% is pretty darn good, but if the token is going down to the right and it's going to lose a half of its value, really over the next year, because people are just dumping until the APR goes to a capacity that can sustain the price, and people are like, yes, I'm willing to stake. This is a risky play, but also as the APY goes up and as the amount of try goes down, APY of the try is going to go up because the value of the try goes down, APY goes up. As you stake, you get more earnings. So there's going to be some balance here. So, some caveats in this play is they're talking about raising another fund. They're talking about launching a VE model, which is really helped Curve. Curve is one of the main ones that effectively help sustain their token price. Let's take a look at Curve. They've been pretty on point. And they haven't been that fluctuating. Started out at $15, came down. Hey, but they're at $3. Minimum, they were at 70 cents, 60 cents. But they pretty much stayed around the $2 mark, between $1 to $3. I know that's pretty wide for the last, let's call it year and 2 months, which is pretty good. So they apply a VE model. So one of the caveats is hey, if the trading volume of Trisolaris goes up, APY goes up, staking becomes more interesting, that can create buy pressure and push the price up. Another caveat of this play is if Tri does apply the VE model, what could effectively happen is that could also create buy pressure on token price, and the VE model would then sustain the token price, and shorting the token wouldn't be it. All right. So let's get into Bastion Protocol. They launched less than a month ago. We're, in April 2022. So far they have 286 million in TVL. Their money market lending protocol, once again on Aurora EVM. They did some really cool things in the lock drop and some of the liquidity bootstrap auction things that they did. Okay, so let's dive in. First off the bat, it's a really cool product, but they do these isolated markets, right? So if you want to short Tri, you're going to have to come into the Aurora ecosystem here, right? And what we're going to do is teach you how to use Bastion and their money market to short Trisolaris. So here's the screen that you're going to want to be on. You're going to need to connect your wallet. I've already connected my wallet. One of the beauty is when I'm using ETH layer 1, because of the gas fees, and you're talking about $40 transactions, $100 transactions, you have to be in these plays where, you're making $10,000 investments or above. But in this case, because we're on Aurora and it's pennies, 10 cents, 15 cents, I think you could get all the way down to the $100 mark or even the $50 mark to apply this. That's one of the beauties of Aurora. All right, so let's go in. What you're going to need is USDC at the beginning within your Aurora wallet. On Bastion, you can have bridges. I also like to use Synapse Protocol. So Synapse Protocol is a bridging protocol that you can bridge from Ethereum to Aurora, Phantom to Aurora, et cetera, et cetera. All right, so let's get started. Hop into the Aurora ecosystem on Bastion. And look, I have 10,000 USDC in my wallet. What I'm going to do is I'm going to supply. Let's start with 1,000 USDC. Go through that. We approve it. 59 cents transaction to supply. It's one of the more complicated contracts on Aurora. So 59 cents to apply. I'm also using pretty high gas fees, so it moves pretty quickly because of this video. And great, we have supplied $1,000. Now to short it, what I'm going to do, there's a 2-step process here. Well, actually 3 or 4 steps, right? I'm going to now borrow. Now I can't borrow the whole $1,000. One of the things about these sites is they don't always tell you right off the bat that you have your availability of the funds after a transaction. So I'm going to do a little bit of a refresh here. I have to use as collateral. So I have to turn this on and use it as collateral. And then that will allow me to then lend against it, right? So I'm putting in USDC, and as I put in the USDC and I turn it into collateral, then what I can do is I can leverage and borrow against it. Waiting on the confirmation applied. Okay, cool, supplied, borrow. Interesting. So I'm going to do a hard refresh on Bastion on the website. This is just something that's common within the industry. It's making sure that you have the availability of that. Wallet balance, supply. Let's try this again. Supply. The transaction must not have gone through and have been rejected. Got it. So the first time I was approving the spending, the second time I was allowing to have it as collateral, the third time I actually supplied the balance, right? So there's 3 steps there. Cool. Now that should be there. Now I should be able to borrow. Okay. So here's the thing. Here's USDC. And you can see here that the loan to value ratio is 85%, which means I'm only going to be able to borrow 85% of my, or $850 of my $1,000 in USDC. So I'm going to max out the amount that I can borrow. Okay, 85% of my LTV. That's what they're suggesting, which would then be having me borrow $680 worth, right? So I'll borrow that. MetaMask pops up. Right, so now I just borrowed $680 worth of Tri. I still haven't shorted it yet, right? So if I want to short Tri, what I have to effectively do is go to Trisolaris and sell my try for USDC. So I can max that out and boom. I'm going to get a little bit of slippage. There's going to pay a little bit of a liquidity fee. But now, after I swap, here we go. I have now just shorted try. So as the price of try goes down, right in here it's $680. I now have in my wallet 9,676, right? So right now I'm down $4 just because of all the transactions and the cost associated with putting that, right? So I'm down $4. As try goes down in price, this number right here, this dollar number will continue to go down in price, right? So effectively, like when that goes and it happens, right now, we're at 9,675 or 676 right here. For a break even, I need try to go down a couple percentage points, and then I would be at break even. If it goes down 10%, that would be $60 off of here. On my $1,000 short, I would be $68 down. I would be making something around $60 in terms of after I unround the transaction. So try goes down 10%, I make 10% of whatever this number is. Now, when you get into larger amounts, you start to affect these borrow rates. So by borrowing try, I am paying an APY of 17% per year. And you get into larger amounts, the APY price goes up because there's more demand for the supply. As the supply number goes up, the APY also goes down. So what this is doing is basically creating a market, and it's called a money market for a reason. And the money market, as the supply goes up, the APY is what supplying and borrowing. So it is costing me every single tick, every single minute, or every single refresh. It is costing me 17% on this money that I borrowed. It is a risk. So this isn't for the faint of heart. Now you want to learn how to leverage it, or leverage the short buying. Well, since we have like 80% of our borrow limit is here because we have it collateralized, what we could do again is go and we're not going to max out again. I'm just going to show you how to loop. So I sold the try for USDC. I'm going to go in and supply that $676. From there, we're going to basically go in and show how to do like a levered loop. Now, this is like more advanced, really, really know what you're doing. These things can unwind real fast. You get some volatility in the market. You effectively hit your borrow limit, you're going to get liquidated, right? So we now applied the $676. The transaction has gone through. I'm going to hit the refresh button here. We're back to $9,000 in our wallet, $1,600 there. I'm going to go over here. I'm going to borrow the maximum amount of try. We're going to be at borrow utilization of 89%, which means that if try goes up 8 to 10%, effectively, you get liquidated. You lose your entire $1,000. So it's one of those things. It's high risk, high reward. The more loops, the tighter the scheme and the tighter the volatility. You can also supply extra. After this clicks in, I'm going to get the try in my wallet. And once that pops in to my wallet, I can go over here and I can sell it out again. And now what I just did was a levered loop. And I could do that ad infinitum until I hit the maximum borrowing capacity within the Bastion protocol. So that's how you do a leverage short. So you can go 2x leverage, 3x leverage. It becomes harder and harder because of the protection mechanisms embedded within Bastion, right? So one of the protection mechanisms in there is your LTV, that your loan to value, right? So you're only allowed to borrow 85% of how much USDC that you have in there, right? And I'm going to max out, I just sold the try for 592. So I'm only allowed to borrow against 85% of the USDC that I have in there. And one of the other things is the maximum borrow limit is generally around 80% of what you are allowed to borrow. So let's go here, supply. So once again, it goes down, down, down. They won't let you do this one because it'll be too close to the borrow limit and the liquidation limit. Please consider adding more collateral. They're teaching you This is a good notification, Bastion. Well done. And that is, I think I did 2 loops. I think we're good for now. And that's how you do, it's not exactly 2x leverage because effectively every time you step down, there's a stepwise function where there's percentages, but it's as close to, I used $1,000 or 1,000 USDC to borrow 1,276 using leverage. I have borrowed 1,276. It's not effectively 2x leverage. You can loop it up. You can loop it up. You should have more collateral on the side if you're going to do this because of the volatility. You don't know what's going to happen tomorrow. Try could pop, try could double. You could get completely wiped out. But in a trajectory, most of these governance tokens, if not all of the governance tokens of DEX governance tokens in particular, trend towards zero. And so this is a good strategy on how to short Trisolaris. If you liked it, you can join our Telegram. You can join our website. We have a newsletter coming out and we have token generation events. We're basically pushing out there different projects that we like, that we invest in, and you could come and join all the fun. Comment below. You can see in the information on how to connect with AlphaGrowth. Cool. Thank you for your time.